Hey everyone, what's going on? Just wanted to give you a quick update. JPOW had his meeting this morning. A lot of people were eager in anticipation, but I can't imagine why because there weren't really any surprises. Basically, like we've all been seeing, jobs are okay, not great. While we still have impressive numbers, they are declining. Unemployment has been increasing for the past 6 months at least, and some people are worried that we might end up exceeding that 5% number, which might be bad psychologically for the market. So, no news really. We're going to go ahead with the rate cuts. How aggressive will they be? Nobody really knows, I guess. And it's good that we start sooner rather than later because the jobs growth has been okay. Unemployment has been rising. So, we want to get ahead of that and try to stim the market while we can, stim the jobs market. I guess they're trying to message to companies to not start getting any big ideas about doing layoffs and all that kind of thing. So I think it's good in the short term, medium, long term. I'm not really as bearish as I was a few weeks ago. I think that with interest rates being low, capital is going to seek returns in less safe assets. We're not going to go to treasury bonds and things like that. We're going to go to stocks and real estate. So, what did I do today on this news? Not a whole lot. If you were following me, I basically sold my entire TSM position and most of my Nvidia a few days ago. I've been making some big moves pretty quickly in short succession. What I did today is I trickled into the semiconductor ETF, ticker symbol SMH, and I like this because this helps me regain my exposure to Nvidia. I still own some Nvidia directly, but this ETF has 21% of its net assets in Nvidia. Number two is Taiwan Semiconductor, which I sold all of my positions, so I'm back into these positions. But this also gives me a little bit more sector-wide diversity so that I had a pretty high concentration in Nvidia and Taiwan Semi. And I've been pretty aggressive this year. It's worked out well, but not the best risk management, not being super diverse and all that sort of thing. So this gives us exposure to another Nancy Pelosi favorite here, Broadcom, AMD, Texas Instruments, ASML, which interestingly enough, you can't even buy on RobinHood. You're not allowed, it's not available for trading, but you can buy this ETF and get exposure to ASML. It's a Netherlands company. It is so important in manufacturing some of this really technical equipment that TSM uses, which produces the best chips in the world. So it's an integral part of the whole semiconductor vertical, the whole supply chain. It's a critical company. There are a lot of critical companies, of which there's only like one or a handful in the world that can do what they do. So there's a lot of value and scarcity in tech and semiconductors, which is why I like this ETF. So I didn't buy a whole lot because it's trading, I think, as a whole at about a 45 price to earnings. So I am waiting for it to come down a little bit, hoping it goes down, and at which point, I'll start dollar cost averaging in. If it goes up, great. You know what I mean? So I'm happy either way with SMH. What else did I do? I've been out of Square for a while, and I've always liked Square. I would love to own it at 40 a share. I'd be happy to own it at 50 a share. But for now, I just sold one put actually today before the market closed. For a $65 strike, I'm going to do something I don't usually do with Square. I'm going to do weekly puts. So I collected $100 for selling a $65 strike on Square. Now this isn't going to happen most likely, but let me show you how the math works out real quick. So let's make this a little bigger. If I do this for 1 year, for 52 weeks, this is the annual income I'd get for a $65 strike, correct? So my collateral is $6,500. So this is almost like 90% return on, okay, my math is bad. Hey, I'm an accountant, okay, don't blame me. So that's like an 80% return on your money. Again, it's not going to happen. If it hits my strike price, if it does happen, great, but I'm not banking on it. If it hits my strike, I would sell a put further out, probably 6 months away, and collect a very large amount of premium. And then if I got exercised on it, again, if the whole market sunk, which I don't think is going to happen, especially for Square. It hasn't really dipped below 60, so I like that resistance level with Square. I'm happy to turn this into a wheel strategy where if I'm assigned the shares, I would just sell calls to get my way out of it. I know that some people like Square and they prefer to hold it long term, but I'm happier to be a trader with Square. That's just my preference. So let's say we're selling covered calls 35 days out. If we take the, let's be a little bit more aggressive. If we take the 31 delta and promise to sell it at 70 bucks a share in the next 35 days, we can collect $140. It's got an implied volatility of 38 at the moment, so it's right in that range where I like to sell calls. But I'm just saying hypothetically, right now I'm not there. I don't own the shares. I am selling puts and hoping to get ideally 80%, which is kind of funny because my portfolio as a whole at this point is up about 72%. So in case you missed what I said the other day, the reason I sold my entire TSM position and my entire or the majority of my Nvidia position is because I wanted to lock in some of those gains, because I have seen with this market volatility swing up and down. I mean, one day I was up 60%, one day I was up only, it's crazy. It's going to sound crazy, but I was only up 5%. And that's basically shaving off like 50% of my gains on a year-to-date basis. So as the market gets frothier, I expect the news of interest rates to kind of create another mini bull run. I am cautiously optimistic for the rest of the year. I'm even optimistic through the end of 2025. Given where rate cuts are going, I think we're going to continue to see 25 points as a basis cut for interest rates on a regular cadence. I think that even as individuals continue to struggle with higher grocery prices because inflation may slow down, but I still think there's a problem of everyday people having enough disposable income at the end of the day. But I will say that Main Street isn't Wall Street. The stock market doesn't really correlate to how the average person is doing. It's not great, but we are also seeing from these economic data that are coming out that the percentage of savings for each person is going down, has been steadily going down quarter on quarter. So that's not a great sign. And again, in conjunction with the unemployment creeping up, I think that not this year, not next year. Again, I'm not an economist. I'm not like, this isn't financial advice, but I think at some point this is something that will have to be dealt with. If JPOW and the government with fiscal and monetary policy, if these things can't come together to ease the burden of everyday people, these problems are going to start impacting the stock market. But as of now, I don't really see that happening, or I don't expect it to happen, which is why I'm continuing to be bullish and trickle money back into my portfolio after locking in all those gains from all those crazy tech investments that I made. So anyway, just to recap, I'm basically selling puts on Square, and I'm going to dollar cost average into SMH, ticker symbol SMH, which is the semiconductor ETF. I'm going to DCA into that probably through the end of the year, and I'm expecting January and February 2025 to be pretty frothy. So I'll probably revisit my position there and either expand it or see what other stocks are looking good at that time. I always say there's deals to be found, deals to be had, but as far as the things that I kind of monitor, I'm not really seeing, if I sort by stocks that are near their 52-week lows, I'm honestly not seeing a lot of great deals that I'm excited about. So that's why I'm kind of holding steady for the time being. If we look, even Nike, it's 18% above its 52-week low. That's something that has been kind of popular in the news lately. We talked about Ford actually a week ago, remember? I think because it's a cyclical, it's going to really recover when there's an expectation that interest rates will go down. So we saw Ford jump up. So if you listened to me the other day and bought Ford, good for you. Again, like I say, it's not a stock that's going to get you loaded or like quadruple overnight or make you rich, but it's a nice safe play. They pay a pretty healthy dividend, and it's better than bonds, right? So that's why I like Ford. And there's one more position I forgot to mention, actually. I want to cover with you. I am pretty bullish on RobinHood I'll probably do a video dedicated to RobinHood again at some point. I've done one in the past, but I don't think I did it justice. I really like RobinHood as a user, and I'm basically selling this $18.50 put. I've only got one open, and this thing expires on September 20th, so collected 45 bucks in premium. I wouldn't even mind potentially rolling this, just locking in my gain and rolling it all the way to December 20th and just taking that $18 strike, collecting another $93 in premium. I think that would put my basis near $17.15 a share, which for Robinhood, I would love to own at that price. I think it'll continue to rise again with the lowering of interest rates. I think there's going to be a little bit more traction with retail traders, although I do think there's some conflicting data about what individuals and investors are going to do if their expenses are high, if savings are beginning to decline. I don't know how much retail traders are going to have as far as disposable income to trade, but that's what drives their revenue. As far as institutional interest, that could counterbalance that, but Robinhood is essentially a retail trading platform. They are trying to diversify into things like credit cards. So anyway, there's a lot of different variables here, but I do love Robinhood, and I think that I'm looking to continue rolling puts, maybe doing the wheel strategy. I'm targeting probably a 20% return on investment in the next 7 to 8 months. It could be more, could be less, but that's kind of my plan for that. So that's all I have for now. Keep an eye out for my videos, and don't forget to subscribe so you get to see more of me, and I will see you in the next one.